Hey everybody, this is Sean Price with Price and Price Group of Samson Properties, and it is time for our market snapshot. What's happened in the Northern Virginia real estate market in the last 7 days in under 5 minutes, but this one's going to actually be a lot longer because we're also going to talk about what happened in December of 2024 versus December of 2025, and we have our year-end review of 2025. So did prices go up? Did prices go down? What happened in the Northern Virginia market? Hang on, let's go find out. Okay, so it is the time of this shooting is January 18th, so all the numbers are in for December and also for the entire year of 2025. So there's three different types of market reports that we're looking at today. The first one is our market snapshot, which we do every 7 days. And the reason for the 7-day market snapshot, in that snapshot, we're looking at what we call the lead measures. We're looking at properties that went under contract in that 7 days, and we're looking at properties that came onto the market. So we're looking at what actively happened for supply and what actively happened for demand. Demand being the properties that went under contract, supply being the inventory that came onto the market. That supply versus demand ratio lets us know what the competition is real time as you go out in a given weekend to look at properties. So that's the important thing that we look at for the market snapshot, because it lets us make real-time decisions. So as a seller, we know what we can expect, and we can have an idea of if our decisions are working appropriately or if it's the market. And as a buyer, we know what we need to do strategically and how we need to plan on, potentially writing offers and so on. So that's the purpose of the market snapshot, lead measures. Then we do our end of the month market report. And what the end of the month market report it does is it usually comes out, we usually bring it out about the 15th of the month, maybe it's somewhere between the 10th and the 20th of the month, whenever all the numbers are actually in. This gives us more of a bird's eye view of like where the market is trending. And the reason we don't use that for real-time decisions is because the data in there is quite often old. So let's say that we're talking about December of 2025, and we're looking at a transaction that closed on December 1st, 2025. So that close date, that day that it was sold, is already, today being the 18th, it's already 39 days old, 49 days old. 31 days plus 8, 49 days old. But that property probably went under contract November 1st. So now all of a sudden that is 79 days old, right? For the market, it tells us the market activity that was happening back in November. So we can't use that to make real-time decisions this weekend, but we can use that to give us data to see what's happening and where the market's trending. When you're listening to the news, they are always going on sold data. Because that's what they have. So that data is anywhere from 30 days old up to 79, 80 days old, sometimes 90 days old, depending on how long it took the media to get the report out. So you can't make decisions based on that. Okay, so that's the reason why we have the three different levels. And then the year-end review is going to show us the pattern that happened over 2025. So we can see what the appreciation was. Did prices go down? Where's the market trending, like on the big picture? Okay, so this is going to be a really special report to give you all that information. So the first thing we're going to do, we're going to dive into the market snapshot, what's happened in the last 7 days, so we can see exactly what you can expect as you're going out this weekend and looking at properties. Excuse me. So the first line that we're looking at here is the buyer activity. This black line is the buyer activity. That's the number of properties that went under contract in the last 7 days. And you can see we've been trending down through the holidays. We are now into January. We trended up a little bit last week. And again, inventory was dropping dramatically. So even if we're in a seller's market, which means there's more demand than inventory, then if inventory is going down, then demand's going to have to go down because there has to be properties to buy. So you can see that we had a little bit of an uptick last week, which gave in inventory, which gave us a little bit of an uptick in demand. And then this past 7 days, we had another significant uptick in inventory. And you can see this uptick of inventory 14 days ago caused this huge uptick in demand. So that's two things that happened. Number one, there was more supply, so the buyers started buying. And number two, the interest rates started coming down. We actually dropped into the fives this week and we've seen mortgage applications go up 30%. So the buyers are all of a sudden starting to come out there. So we may be jumping into the spring market earlier this year than we typically do. So we can see demand certainly spiked, and then inventory also spiked. So we should start seeing this market picking up, and we're starting to feel that. We're seeing showings go up, we're seeing buyers coming off the fence. And then what that did down here, this gray line right here is a nice neutral market where it's pretty even, balance between buyer and seller market. This last week we spiked right back up into the seller's market. So we've been in a seller's market. We did have a big drop right here because last week we had this increase in inventory, but only a slight increase in demand because the buyers didn't have time to put those properties under contract. So that gave us a fake dip down in here to a buyer's market, and you can see we're back up into a seller's market. So I expect this to stay into a seller's market from this point on, at least until July, August, something in that time frame. Probably beyond that as well, especially if they keep bringing interest rates down. We're just going to see another crazy spring out there. So what are the contracts trending to do? You can see that in the last 7 days, we had 135 contracts that came into Cardinal Title. You can see 43% of the properties went lower than list price, and 57% of the properties went at or above list price. You can see down here, as far as days on market, 59% went over 22 days, and then 41% sold in the first 21 days. So what this is telling us, and this is something that's really important for buyers to understand, and that's why we need to look at these statistics. In 2022, 2020, 2021, even 2023, if a property was on the market for 14 days, it was either significantly overpriced or there was a major issue with the property. So you can start looking at trying to get the price reduction. Now you can see that 59% of the properties sold in 22 plus days, but only 43% went under asking price. So that means that even properties that are over that 22 days, your agent needs to be able to look at it and see what is the fair price, what's going on here, because properties are sitting a little bit longer. It does not mean that you're going to get an automatic discount. So if you're looking for properties where you can get a discount, you need to be looking about 45, 60 days out. And it doesn't mean you're getting a discount on the property value. It just means that you might be able to get them down to the actual market value. As far as, I have to move my camera here for just 1 second. As far as cash versus financing, pretty typical. Only 17% of the purchases in Virginia were cash. For the finance contingencies, we're staying pretty consistent. About 3/4 got their finance contingencies, 3/4 got their appraisal contingencies. And then what's interesting on the home inspection is 81% got home inspection. So this is still something that's very, very valuable for buyers, even though the market is picking up and even though we're in a seller's market, buyers can still get their contingencies. We don't know how long this is going to last, because as we start seeing multiple offers happening, we're going to see these contingencies starting to go away again, like they did in the previous years. I'll give you an example. I had a buyer. We went out and looked at properties this morning. Started the day with 3 properties. Scheduled these last night. All these properties just came on the market. By the time I got up this morning, 1 was under contract, 1 already had an offer in hand, and we got to see the 3rd one. So we went to see 2 properties, but 1 already had an offer and will likely ratify today. So properties are starting to fly off the market again. All right, so contingencies are still there, so buyers need to take advantage of that. Again, we may see these contingencies starting to go away as soon as next week, depending on what the numbers show. So this is what's going on with the market in the last 7 days. So when you're out there as a buyer, it means that when you see a property you like, you really need to get out there and see it quickly, because there's a chance that it'll probably go off the market fairly quickly. Even though these numbers don't necessarily show that's what happened last week, I'm telling you, this weekend we've seen it happening. Buyers need to be strategic. You need to have your inspector in place. You need to have your team in place and be ready to write offers quickly. And if you want to do a pre-offer inspection, just in case you get in a multiple offer situation, you need to have that inspector lined up. If you guys need any referrals or references for inspectors, for great lenders, for great title companies, anybody like that to help you build your team, feel free to reach out to us. Also, as a buyer, if you'd like us to just help you with the strategy session to help you figure out how to navigate this market, we'd be happy to do that as well. Sellers, it is starting to become more favorable for you as we go into the spring. but you still have to price it appropriately, and you need to prepare the property appropriately, and you cannot just throw a property on the market. As you saw in the stats, 43%, I believe it was, went for under asking price. So properties that are priced too high are still not moving, but if you price it fairly, it will move quickly and you will get top market value. So there's a great opportunity for sellers out there and buyers. The window is closing, but you still have that opportunity to get your contingencies. Okay, again, buyer, seller, reach out to us. We'd be happy to go over your situation with you. 703-783-2143. Okay, so that's the market snapshot. So now we are going to dive into December 2024 and what happened with that compared to December 2025. What was the trend and what happened? So let's dive into that. Okay, so again, these are numbers that are from the properties that closed from December 1st to December 31st. So we had a total number of new listings in December of 492. The previous year we had 519. So listings were down by 5.3% versus 2022. So inventory was low. Number of sales were only down 1.3%. Okay, so what does that mean? That means that inventory went down, but the number of transactions went down, but not as much as inventory did. So that tells us that the demand was a little bit higher than what the inventory was. So we had 851 transactions. You know, it's funny to me because people worry that there are no transactions that actually happen in December because of the holidays. But we still had 850 transactions happen in December. And December 2025 or 2024, it was 862. So pretty even comparatively, but it's 3% technically. Days on market. So again, we were seeing when we were looking at the stats on the market snapshot, we can see that properties are sitting on the market a little bit longer. And you can see that here. December 2024 was 27 days, 2025 was 34 days. The tendency and the trend year over year is that January has the highest days on market. So I wouldn't be surprised if when we do this market report next month that we see that high days on market for January. But the key is that we are seeing things moving quicker. So it's going to be interesting to see what happens with January, but I think we'll still see that days on market be a little bit higher than it has been. Months of inventory. This is a very important number. This is our absorption rate. This is what we can statistically look at to see if we are in a seller's market or a buyer's market. It's generally accepted that a 5 to 6 months absorption rate is a neutral market. Anything above 6 months is considered a buyer's market. Anything below 5 months is considered a seller's market. And we are staying consistently at 3 months. December of last year, we were at 2 months. So a little bit on that absorption rate, and that's due to the days on market, and that's also due to that increase in inventory. Median sales price. So everybody always wants to know this. What are the values doing? Median sales price December 2025 was $722,500. December 2024 was $699,000. So it was up 3.1% year over year for the month of December. So the market is still showing strong. The appreciation is at a very reasonable level, but properties are still appreciating. So real estate is still very safe to get into, and it's a good time for buyers before we start really hitting that appreciation again. If you have any questions, reach out to us, 703-783-2143. All right, we'll see you on the next video. Okay, so the numbers are in, and now it is time to look at how did 2024 compare to 2025. Was it a year of depreciation? Did home values go down? Did they go up? Did the interest rates affect them? Did the new election come in? Like, what happened with all of the drama that we saw of 2025? Let's dive into the numbers. Okay, so this is the market report for 2025. We're going to look at what happened, and it wasn't an exciting year. You know, we had the change in the administration, we had interest rates up and down, we had a lot of news, a lot of different things that happened. So let's just see how it affected the market. And, you know, we saw a lot of projections about how the real estate market was going to crash. And so let's see what happens. Just dive into the numbers. All right, so here we are. We're on our first set of information, and you can see for 2025 we had, and this is for Fairfax County, Virginia, we had 12,010 transactions. So number of transactions was up by by 29. We had 1,981 transactions in 2024, 12,010 transactions in 2025. Now, this is important because you can see that the average, going back to 2016, we were at 15, 16, 16, 16, 17, 19, 14, and then we had the interest rates start going up. So we had a significant drop in the number of transactions. Nationwide, 2023 and 2024 were worse than 2008, 9, and 10 during the crash. We had the worst years with regards to numbers of transactions ever in real estate. And that was because there was no inventory because the interest rates went up. So nobody was willing to sell their house with a 3% interest rate to go into a 7 or 8% interest rate. So we are starting to see the rates coming down. We're starting to see inventory go up just a little bit by 0.02%. Actually, that was the number of sales, but we're seeing the inventory come in. So we're seeing people starting to buy. Now we're seeing the interest rates to continue to come down. So buyers are starting to come off the fence. So that's what happened with regards to the number of sales in 2025. Days on market did take longer. And if you watch our market snapshot or if you watch our monthly summaries, you'll see that this trend is across the board. This does not mean that that property values are going down. It just means that properties are sitting a little bit longer and they are taking a little bit longer to come off the market. The reason for that is because we've seen inventory going up, so buyers have had choices. So buyers, they weren't so urgent and there wasn't as much multi-offer situation, so buyers had time to go look at a property, go home and think about it, maybe go back for a second look, maybe come in with an inspector or bring their family. They just had time. So that's why we saw that the days on market, it went up 4 days on average. Next is the number of new listings. So inventory went up 6.7% versus 2024. And again, this is important because if you go back over here, you can see constantly over 20,000. And then 2022 was 18,000, interest rate spiked and it came down significantly. So this is why the market has been slower with regards to transactions because there hasn't been any inventory out there. But most importantly, what did the sales prices do? This is what everybody always wants to know. Median sales price, of course, is it's the statistical representation of the number that falls right in the middle of a large data set. So that's the number that they use for sales price. Doesn't always equal value, but it's a good representation of where the market's trending. So especially when you have a large data set. So you can see that 2025, for the year, appreciation was 2.7%. So not like it was several years ago where we saw double-digit appreciation, but good, natural, healthy appreciation. We went from 730 in 2022 up to 750 in 2025. Or 2024, 730, 2025, 750. So overall, the market's healthy. The market has been calmer. We are seeing, this is shot in January, this video is being shot in January. We are seeing the market picking up quite a bit, but it was a healthy market in 2025. So what do the trends tell us? We had an election, and there's a lot of people that are still sitting on the fence waiting for prices to come down. They've been sitting on the fence since way back here. And the problem with doing that is when you're sitting on the fence, let's say you started sitting on the fence in 2020, okay? Property values were under 600,000. Now that same property is going to cost you almost $750,000. What? $750,000. So you've lost $150,000 in equity while you've been waiting. If that drop ever does come, is it going to be significant enough to get you back to that price point? I don't think we'll ever see prices of 2020 again. If we do, it's because of a significant crash, but we've got the metrics in place and the mechanics and the laws that have protected people with their equity in their properties. The lending has been very, very strict, and the people that are buying houses are very well qualified. There is more equity in the economy in our properties than there ever has been. And we'll see statistics where the mortgage debt is higher than it's ever been. That is true, but the equity is almost triple that. So people have room in their houses. So if they start getting in trouble, they're just going to sell the house because they have the equity. They're not going to go into foreclosure. So we're not going to see this rash of foreclosures that we have seen in the past. And that's what people are waiting for. So what are the trends? Let's look at what has typically happened. So this is a chart since 1942. You can see that there has not been a single decade that there's been a loss as far as property values are concerned over a 10-year period. And then you look at it year by year, you can see there's only been 7 years since 1942 that home prices have gone down. This is out of an 81 year sampling. So 7 years, the prices went down. 73 years, the prices went up. Now, maybe it was up 1%, maybe it was up 2%, but it went up. Maybe it was down 1%, maybe it was down 2%, but it went down. You can see that here. Or you have the crash of 2007, 8, 9, where it was down significantly. But that is not something that we're going to see again, simply because we have the mechanics in place. So the people that are holding off for a crash to come, it's just not, historically, it does not look like it's a wise decision. Nobody has a crystal ball. Something could happen tomorrow and the market could crash and everything I'm saying could be totally wrong. I do not have a crystal ball, but all I can look at is what's happened historically and see what is the potential projection and make a decision based on that. And it's just not a wise decision to wait if you're thinking about buying. We can look at another statistic here. Existing home prices have gone up after 7 of the 8 last presidential elections. This is actually now 8 of the 9 last presidential elections. This was before Trump was elected this time around. The only time that prices went down, again, was the 2008 election, and that was when we had the housing crash that was caused by the lending policies. So there's nothing that's indicating that prices are going to be coming down. If you have any questions and you're a buyer and you're considering purchasing a home, please give us a call. We'd be happy to sit down with you and talk about your situation. Some people are saving up to try to get to 20%. You don't have to have 20% to buy a house. There are first-time home buyer grants. There are grants for first responders. There's all kinds of options out there that you may not be aware of. So give us a call, 703-783-2143. We'd be happy to sit down with you and see what can be done with your current situation. All right. Everybody have a great rest of this weekend. It's a little bit rainy and snowy outside, so stay safe, warm, and dry, and we'll see you guys on the next Market Report.